Hello, everyone, and welcome to Get Those Cryptos, where we talk about all things cryptocurrency and blockchain technology. We do this live every Wednesday night at 8:30 p.m. Central Time. I'm in Dallas, Texas. Usually I have Mason with me, but he was working at an exchange, crypto exchange in Hong Kong. Now I think he's in the Dominican Republic or Puerto Rico somewhere. He's traveling, having a good time, coming back to America. So I think he will be with us next week. But if you haven't done so already, please make sure to subscribe to this channel and like this video. We talk about a lot of the news that's going on with crypto and project updates. We talk about all things cryptocurrency and blockchain, like I said. So we do a lot of the work so you don't have to, and we do it once a week. So make sure to subscribe. Today, we are going to talk about the market as a whole, and I have a lot of really interesting news articles that have happened within the last week and some within the past couple hours. So let's go through that. I'm going to share my screen right now. Okay. Also, everyone, make sure to ask any questions in the chat and interact here. Try to make this as interactive as possible. It makes it more fun for everyone. So right now I'm looking at CoinMarketCap. We'll probably start using on-chain FX, a different website to view this market cap of crypto, probably a more accurate one. So here we are. The market cap is at $271 billion. It's sad times. I think last week we were at 370 billion. So it's gone down substantially within the past week. And the 24-hour volume, 16 billion, Bitcoin dominance at 40%. And you can just see Bitcoin's, it did hit below, I believe, 6,300 today. Ethereum below 500, Ripple 53, although Ripple did get their new logo for XRP. Let me know what you think about it in the comments below. I can't decide yet. It's kind of weird. Bitcoin Cash down. I mean, everything's down. Let's see if there are any winners. There are some. Okay, DigiStao and Icon is up there. Decentraland, Byteum, and let's see, Polymath going down, Data Token going down. So it's not looking great right now, but let's talk about it. Why do we think the market has gone down? Well, everyone is saying that it was because of this Korean crypto exchange called CoinRail, that there was a hack for $40 million. Now that's a lot of money. And everyone was saying this is absolutely the hack. All the headliners, the Wall Street Journal, everyone was saying this is the reason why crypto markets are falling while they're tanking. It's because of another huge hack. Well, like I said, 40 million is a lot of dollars, is a lot of money, but compare that to the other hacks that have happened. This is not a big deal. I mean, it is a big deal because people lost money, and that's serious. And there is a lot of money that is lost, but this is only it's either 90th or 99th biggest crypto exchange in the world. So it's not even in the top 50. It's barely cracking the top 100. It's really not that substantial of a loss and not that substantial of a crypto exchange, although it seems that way. Nope. So they lost around $37 million and everyone started panicking. It was mainly the cryptocurrency that was mainly lost was Pundi X, and they are trying to become a point of sales with software, hardware, everything, and point of sales being, a credit card swiper where you can take crypto. And it's a really cool project, actually. I've done a little bit of research on it, and it has a pretty good community, and it's really sad that this happened because one thing to note is that Pundi X did not get hacked. It wasn't their crypto. It wasn't their project. It was the exchange that got hacked and took Pundi X. So you can't blame Pundi X for this. It's just really unfortunate that this happened to them. And I believe there are two other cryptos that got stolen. But again, this is happening, it seems like every week. And this is a huge problem in the space. But one thing I do want to say, one piece of silver lining in all of this is that every time this happens, people and other crypto exchanges are learning from it. And every time they get this opportunity to learn, it is going to be a huge deal. It's all going to accumulate. And I find this frustrating. I mean, yeah, this is very easy to say, especially from my standpoint. I'm not a crypto exchange losing all this money, getting a bad reputation, but I have developed an app and software, like a pretty complex software that we sell to businesses. It's actually for valet parking companies. And in this software, I actually didn't develop it. I have developers who did it, but I, drew out everything, had the idea and showed it to them. And when I test it, it's taken 2-3 years now just to go through the testing phases. When I test it and there's a bug, it's so frustrating because it's been 2 years and I'm still working through this app, finding new bugs every single time. And when I tell my developers, they always remind me that every single time we find a bug and we fix it, we are making our app, our software, our project that much more strong and that much more, what's the word I'm looking for? Just smart. And every time we do that, it's just going back and forth, reiterating. And this is the exact same thing that is happening with the crypto space. Every time an exchange is getting hacked, they become much stronger right after that. And it's happened with Ethereum recently. They had a $20 million hack. It's happening all over the space. It happened with Verge with the 51% attack. And don't get me wrong, I don't think this is the last one. I think we're going to see a lot more hacks on smaller exchanges. And I think we're going to see a lot more 51% attacks on some of the smaller cap crypto coins as we've seen before. There was a Reddit post that showed that it's really not that difficult to do a 51% attack and take over a whole blockchain of some of these smaller cap cryptos and then just start raking in all that money. I mean, it's crazy. Security is a huge factor to play here. But again, every time something bad happens, it only makes it stronger. It only improves the whole system and the whole crypto space in general. But I mean, this meltdown, it lost $42 billion in the market cap over the weekend. And I mean, let's talk about that because everyone was saying that, yes, it was CoinRails, this exchange, it went down, that's why. And then there's actually an article that just got posted within a couple of hours that says that in 2017, when Bitcoin hit 20,000, that was actually pure manipulation from Tether, because this professor or a group of professors out of the University of Texas came out with this research paper saying that they study a bunch of financial markets and they see this pattern very often when markets are manipulated. And he said that he zeroed in on 87 of the largest purchases of Bitcoin with Tether from March 2017 to March 2018. And the cases examined, new Tether had been issued within the prior 3 days, and Bitcoin's price had fallen in the prior hour. What followed were increases in Bitcoin's price, and those gains added up. Even though the 87 examples account for less than 1% of the time period examined, they amounted to about 50% of Bitcoin's compounded return over that year. In comparison, 10,000 simulations Griffin and Shams ran demonstrated that this behavior never occurs randomly. And this is what we've been talking about. It is being manipulated. The whole crypto market, that does not fall. Where are these tabs? Why aren't these tabs coming up? The crypto market doesn't lose $42 billion in value just over the weekend just because of a little hack of the 100th biggest exchange in the world, the 90th, 99th biggest exchange in the world. That is not a thing. I mean, Bitcoin slumped to more than 50% this weekend. And again, this is just, it's not just people saying, oh, I'm getting tired of it. I got a little scared about this crypto exchange. I'm pulling up my money. It is 100% being manipulated by people like George Soros. He's been out of the picture for a while, but he's known to short the market. And all these companies are saying, yes, we are shorting it. Some are being fully transparent and being proud that they're shorting it. So it just goes to prove. And then with this about Tether, I mean, that could be very well be, these people are professors that have done a ton of research. They're professionals when it comes to market manipulation in different markets. So I'd like to believe this is true. And everyone in the crypto community has been saying that Tether is crypto's ticking time bomb. It is such a problem. We need to get rid of this. But the fact that a stable coin can actually have a ton of potential, having a stable coin is really what can bring massive adoption to crypto, because it's just easy for people to understand that one stable coin equals $1. It's just something that you can peg to $1. There's also stable coins that are pegged to gold. A stable coin just being that it is a cryptocurrency that is pegged to a real asset. So a cryptocurrency that is pegged to the US dollar, 1-to-1, or cryptocurrency pegged to gold. Whatever the price of gold is equals one cryptocurrency. So this is, I believe that this is true. Tether and Bitfinex, and furthermore, when the CFTC tried to go into Bitfinex's headquarters and the SEC tried to investigate them, they said, no, we're not doing this. We are not allowing this subpoena. You cannot come in here and look through our accounts. And that is really fishy. Why would they not allow people to go in there if they have nothing to hide? So I think they're onto something. I think the whole crypto community needs to get away from Tether. There are so many better alternatives if you do need a stable coin, and there's so many different stable coins being worked on right now that is going to be really exciting to see, that could really lead to widespread adoption. Hi, Natasha and Eric. What happened to the investors' money? So that's a great question. With this hack on CoinRail, it depends on the exchange. So a couple months ago, there was the hack for $400 million with CoinCheck, the Japanese exchange, and that was a huge deal. $400 million, compare that to $40 million, and this looks a little small. But with CoinCheck, they actually reimbursed every single person who lost money. All of their customers were given back their money. And with this, I'm not sure yet. I don't think it's been publicly announced what is happening with the investors' money. So we will see where that goes. It's definitely going to be interesting to follow up and see where CoinRail goes. I'm pretty sure that they said 70% of what they have right now is now in cold storage. Yeah, here we go. CoinRail contends that 70% of its total coin reserves have been moved to an offline cold wallet and remain safe. And that's how all of these exchanges get hacked, by the way. So you have a cold wallet, which is completely offline. And what that means, it's literally not plugged into a computer. It's not plugged into anything. It's just like having one of these. This almost looks like a Ledger Nano S. It's a jump drive. You can put some crypto on this, and then you can lock it up in a safe in your closet and no one can touch it. It's not connected to the world. There's no Bluetooth or anything. But they also need a hot wallet. And a hot wallet is nice. I have little props right here. A hot wallet might look, I don't know if you can see it, might look like this, where it's actually a cord connected to a computer, which is connected to a wallet of some sort. Hopefully you were able to see that. So you can have these cold wallets that are completely offline, and then you can have these hot wallets that are connected to the computer and connected to the world, where they can be extremely vulnerable to hacking. And so that's what these hackers are getting into. They are getting into these hot wallets that are connected. But you might be asking, well, why do you need any of these hot wallets? You need it because when you have a cold wallet, it's not connected to anything. Therefore, you can't have it in the market. It can't be liquid. If you have a ton of Bitcoin on a cold wallet, you can't be trading it back and forth. And so these crypto exchanges need a ton of crypto on these hot wallets so that other people, they can have the funding so that other people can be trading back and forth, and they can have all the fees associated with it and everything, so that these crypto exchanges can support themselves and run a business. But right now, that's the only way that they have to do it. That needs to be innovated. That needs to be changed so that this can be a more secure process, because there has been so many different hacks in these exchanges. It's been insane. But again, like I said earlier, with each hack comes a stronger crypto ecosystem. Everyone's learning from everyone. Natasha, I see you want to talk about EOS. Yes, I actually have EOS article that actually I will get to right now. You said that voting will be done at some point in the mainnet, and BP selection issues will be water under the bridge. It reminds me of the internet before the internet was a thing. So yeah, I will go into what Natasha is talking about right now. And Eric says it makes they would reimburse because the investors are not going to come back to exchange that they feel will be hacked. Yeah, exactly. I mean, they probably have so much money anyways. They definitely will need to reimburse all of the people who did get hacked, because otherwise, like you said, it's just not good business sense. No one's going to want to come and use your exchange if you got hacked. Okay, so here let's talk about EOS. And again, this market is being manipulated. That's what we were just talking about if you're just tuning in, and whether it's coming from institutional investors like George Soros or through Tether, all of these different things just accumulating at once. So EOS stalls as chaotic launch fails to meet vote target. So as Natasha said in the comments, what's going on with EOS is basically they have a huge amount of money. They have billions of dollars and so much potential to be a really good platform for other cryptocurrencies to build on. They are sacrificing some centralization in order to scale really fast. And what that means is that the way that they work is that they have 21 block producers instead of, say, Bitcoin that has miners all over the world, all these computers running and verifying things and keeping a public ledger of the blockchain. So instead of that, because it has to go to all those computers and verify, it's kind of slow. Hence why Bitcoin can only do like 10 transactions per second, if that. Now with EOS, they're claiming that they can go, 100,000 transactions per second, million transactions per second, that it's going to scale. It's going to be insane. But they say that when you give away one thing, when you're trying to improve one thing, you have to give away another thing. And so with EOS, they're saying that we would rather have speed over decentralization, because with Bitcoin, everything's decentralized. All these different nodes are all over the world, all the computers, and they're verifying things, different places, a ton of computers. With EOS, they only have 21. They have 21 block producers, and they're the ones who will verify things and all that. And so you might be asking, well, how did these 21 people get picked? And so EOS tried to make it decentralized in a way where they said, we're going to let the community decide who these 21 block producers are. So they're saying, we will let you vote. Everyone who has EOS tokens, all you have to do is stake your tokens, which means I'm going to put my tokens up and they're going to be frozen. But because I do that, I'm rewarded with the vote. So I can vote on these 21 block producers. And I forgot exactly how many votes you get, but you can vote on these 21 block producers, and it goes both ways. So you can vote on these 21 block producers. And then if one of these block producers, if they, are being a bad apple, they're not verifying things or doing some sketchy things, then everyone could also vote them out of that position and vote someone else new in. And being a block producer has a ton of incentives. You can make a ton of money doing this and with running a node and everything. And so that is the incentive for them. And it's incentivizes everyone else to want to become a block producer and be on good terms and do good things for the community. But in order for these block producers to go, and for the mainnet being just the actual crypto to launch, so EOS, the platform, to actually launch, they need at least 15% of all tokens need to be staked, which means all of these people who have EOS, who are just sitting there on the sidelines, they need to vote on the block producers, but it needs to be at least 15% of all EOS tokens. So all these people who have the option to vote, 15% of all EOS tokens need to vote, and they need to say, we choose these people as our block producers. Once they get past that 15% and they have the block producers, then EOS launches and it's all is well. Of course, there's probably gonna be a lot of bugs and everything, as already has been, but it will actually launch at that point. The problem right now is that there's less than 7% of EOS tokens that have voted. And So you need 15%, but only 7% has actually voted. And this is a huge problem. Everyone thought that, oh, once it launches, once it's ready, everyone's going to be voting. It's going to be great, all happy-go-lucky, but that's just not the case. Now, here's why I think this. There are three main reasons why I think this. Number one, it is way too complicated for EOS, for an average investor to stake your coins and to actually go in and basically vote. I mean, it's an incredibly complex system, not super complex, but for the average investor, they need to put up their EOS tokens. They need to put it temporarily on hold and freeze them and stake them. And then you can go in and vote. The process requires command line is what it's called. And let me show you a picture of what command line looks like. This is what command line looks like. Now, if you're an average investor getting into EOS and say you want to vote, you're trying to help the community, you really believe in it, but then you pull up this. I mean, for non-technical people, this looks like gibberish. Even for me, I don't know how to code, but I'm pretty tech savvy. I mean, this is too much to do. You can't rely on people doing this. So that is the main reason why I think there is such a not backlash, but not as many people are jumping on board, that there's only 7% out of the 15 voting, because it's such a confusing process. I mean, look at this. This is ridiculous. This is not sustainable. And this is a lesson to all things crypto right now. It's still in the infancy phases. And because of that, all you have in the space for the most part are developers, are technical people. And that's a problem. We really need to expand to all different industries, to people who are non-technical, who are technical, who don't know anything about computers. And so when that happens, that's when crypto is going to have mass adoption, not when you have lines of code like this and command lines. So that is the first reason. Number two, I don't think people care to vote, to be honest. I think a lot of people have, buy some EOS because they heard the hype. I mean, let's face reality here. There are tons of people who don't do research about crypto, who don't research a team, who don't read the white paper. They just hear that EOS is the next big thing, that it's going to be the next Ethereum killer. And so they go in and they buy a ton of EOS, they forget about it, or they wait for the price to go up. And they're not even going to do research. They're not going to look at the news. They're not going to see that you have to do this code line and that you have to go in and vote for these people before the mainnet actually launches. They don't care to do that. You have to think like a realistic person. You can't think like a technical coder, which, I mean, no offense to anyone who is a coder. I mean, my developers and coders have told me this themselves, that they just have a different mindset. They don't think in these generic kind of bird's eye view. They think more very detail oriented, code focused and technical. So number two, I don't think people care to vote. And I don't think when they buy into something, I don't think they're even thinking about voting. They just buy into it because they hear the hype. Number three, it's really risky in order to vote right now. So I talked about the hardware wallets that were connected to the computers and able to be hacked. Well, right now, that is what is currently being used to stake all the tokens. So if I have EOS and I want to vote, then I have to put up my EOS tokens. I put it in this hot wallet and they're frozen there, but it's still on this hot wallet that's connected to everything. And because of that, it's very vulnerable to hacking, especially when the project is so new and it's just launching right now. That is a huge problem. There's already been a ton of bugs. I mean, and as expected, I'm not trying to bash on EOS, but there's going to be a ton of bugs with any project you start out. When I started my app, it's still 2 years down and we're finding bugs, which, I mean, that might be a little bit too much, but you're always going to find bugs. And so I think that people are nervous to put in their EOS tokens and to stake it on this hot wallet, knowing that it could potentially be hacked. I would personally, if I had EOS, I would much rather be waiting on the sidelines, getting past that 15%, knowing that it's safe, and then maybe putting some in. So those are the three things. That's what I'm going to say about EOS. Let me see what Natasha you're saying. But base picked up way today, voting not intended for average investor. It's very developer focused. Yes. So, okay, that you do bring up a good point, that it is not really for the average investor, it is mainly focused on developers. But in my personal opinion, I think if really crypto is going to really expand and go to the mainstream, there needs to be a mainstream kind of voting system. Because if I'm really into EOS, I do research and I think the project's amazing, but still there are parts about the technical that I don't understand, but I want to participate. I want to vote. I want to be a part of this community because I'm passionate about it, but I can't because of my technical background, because I have a hindrance with technology. So there's my stance on it. But either way, I think EOS has a lot of potential. Like I said, they have so much money that basically if they have an idea, they can buy the talent in order to do it. And I like how they're working with VCs, a lot of venture capitalists. They're working closely with them so that they can find new startup companies and new potential talent, and they can bring them on to the EOS platform. Next, let's talk about IOTA. IOTA is another awesome idea and awesome concept, that a cryptocurrency that is trying to work on the Internet of Things. So my phone talks to my light, which talks to my fan. So I can talk to Siri and tell them to turn on my camera outside, my security footage in the back, and it'll turn it on, and then it'll know to turn on the lights. And so everything's interconnected with technology, whether it's Bluetooth or with data and all this stuff. So that's what IOTA is trying to do. It's a huge, huge project. It'll be really interesting to see, but they actually presented some proof of concept for autonomous cars with Volkswagen. They've been working with Volkswagen for a while. And one thing to note with IOTA, they actually don't use a blockchain. They use something called Tangle. And to be honest, I don't understand fully what Tangle can do. I've tried doing some research, but I really need to just sit down for like 2 days and just really, really read about it. But it's different than blockchain in that it does not use blocks or mining, but rather is built upon a directed cyclic graph, a topology. Gosh, I'm struggling with these words. Ordered system in which different types of transactions run on different chains in the network simultaneously. You can see why I don't fully understand Tangle yet, because I can't even pronounce the words. But anyways, they're working with Volkswagen to basically create a smart car that can do a bunch of different things. With this smart car, the idea is that, well, one concrete thing that you can actually do with this smart car is that you can have an automatic traffic detection. And so say a car is driving around, a self-driving car, and it can detect traffic, and it can sell that information on IOTA's Tangle. And with that information, another car could purchase that information real time for barely any fees. And then that new car who purchased it, they can use that information to plan a route, to know exactly where traffic is, almost like Waze does, but it'll be much, much more accurate in real time, because these cars will be constantly talking to each other using IOTA's Tangle and using their cryptocurrency IOTA. That would allow for faster and more efficient detection and prevention of traffic jams. And this can't be done now because fees are way too expensive. So if I tried to do this, first off, it would probably take a couple minutes, seconds for my transaction to reach your Bitcoin, or excuse me, for my transaction to reach your bank account. And I said a couple of seconds or minutes, but that would actually take, an hour to reach you at least. And then it would take at least 2 days to get into your bank account. So it's taking days to do this, and you have to pay credit card transaction fees, all these different fees associated with that. So if I wanted to pay you 10 cents for some information, that's just not reasonable, because I'll be paying 30 cents in credit card fees probably, if not more. So with IOTA, with Tangle, there's actually a way where you can have no fees whatsoever. And that's why a lot of people love Tangle. There was about a year, probably 6 months ago, Microsoft has been working with it. And I'm not sure if they still are, but I wouldn't be surprised if they are, because this Tangle technology is just absolutely insane. And it's also incredibly scalable. You can have a ton of transactions per second, but it's really interesting because no one in the space there are a few other companies I know. VeChain, I think, is working with BMW, but that's more for the manufacturing side of things with their car, where they can track the supply chain of each part. But it seems like IOTA is really finding its niche with cars and Volkswagen and trying to bring a whole Internet of Things with cars, because smart cars are coming. I mean, everyone knows that there's Uber, there's Tesla, there's Ford, there's Apple. I think Apple actually stopped doing it. Google, who's all making smart cars. So this is the future, and I think IOTA could have a huge role in it. Let's see, and check the comments. Okay. Next. So that was the first bit of good news I wanted to share. I kind of started off with the bad news. Now let's hit the good news. So that was about IOTA. And now I want to share a quote by the ex-Overstock chairman, committed to crypto despite market woes, calls for US regulatory clarity. So overstock.com, it's almost like an Amazon. It's a huge online store that basically has everything. They were one of the first companies to actually accept cryptocurrencies as payment. I remember when it happened, and it was, so exciting at the time. And they say that they get somewhere between $68,000 and $120,000 a week in cryptocurrency revenues, which is pretty good. I mean, people buying bed sheets, toasters with crypto, Ethereum, whatever. So, but the reason why I'm sharing this article is because I really liked this quote and use case given by them. So they said that they pay, and it also goes with what I was just saying about credit card fees with IOTA. We pay a processing fee for credit cards, and we employ about 40 people in our fraud department. That's a cost of doing business with credit cards. When we take cryptocurrency, we have a very small transaction fee with Coinbase, much smaller than our credit card processing fee, and we have no fraud prevention department. It's like a cash transaction. For us, that is a much cheaper way of doing business. So Overstock gets it. And it's funny because right after they announced this, just made that announcement right there, their shares jumped 11% from 35.50 to 39.40. I think this is such an amazing comment because it really does show a real world use case in a online retail store, or it could be in an actual retail store. Whether that's what that's going to look like, we don't know yet. I mean, maybe it can be Pundi X, who we mentioned earlier, who's working on point of sale systems where you can swipe a card, you can swipe a credit card, and it'll be just a normal credit card with your bank, but it'll change that. Say it was a $5 that you paid, it'll change that $5 to that same amount in, say, Bitcoin, and then it'll send the Bitcoin to the store, but you're not seeing any of it. You just swipe the card. There's so many projects like this going on that have so much potential. And processing credit card fees is such a big pain. In our app, it's kind of like an Uber where you can link a debit or a credit card with it, and you can do online transactions with that linked card. And it is such a big pain trying to work around with these credit card fees and trying to work with these companies to get it lowered. And then, like you said, 40 people in their fraud department. You can just totally abandon that, and you can save so much money, and you can make more opportunity for people, because I mean, it would be sad to fire 40 people, but there'd be so much more opportunity with cryptocurrencies and new jobs being created. Next, let's talk about exchanges. First, we'll talk about Coinbase, and next we will talk about Binance. So Coinbase, they've announced this earlier, a couple months ago, actually not even that long ago, but they're announcing an index fund that basically, if you are a big institutional investor, then you can put somewhere between $250,000 to $20 million in this fund, and you just give them the money. You don't think about it, and they'll create, it's an index fund. So it'll be a combination of all the cryptos that they're holding. And so they actually just opened it now. Finally, this is an amazing thing. There's going to be a lot of money that I think floods into it, especially now with everything being at such a low price. So at this stage, we've opened the fund to those who wish to invest $250,000 to $20 million. And it's weighted by market capitalization. I forgot exactly what the weights are, and maybe it changes, but as they announced yesterday, the funds will be rebalanced to include Ethereum Classic, which was actually the next article I was going to say, and more assets when they are listed in Coinbase in the future. At this stage, it's only open to US residents. accredited investors, which means you have to have at least $200,000 annual income and at least like $1 million net worth. So this is going to be big, just something to keep an eye on, because there are a ton of cryptocurrency investors, institutional investors who have a lot of money, who don't want to have to deal with buying a hardware wallet and keeping up with all this, because it is a lot to keep up with. So if you can just tell me, hey, give me $500,000, we'll take care of it for you. And we've been working closely with regulators within the United States, so it's safe. That's a pretty good sell to big institutional investors. Now, next, as I just said, Coinbase will integrate Ethereum Classic across all of its platforms. Finally, Coinbase is actually doing something. It's adding a new coin of some sort. And here is my take on this. It is pretty lame. I think it's kind of obvious that this would happen, and lazy by Coinbase's part that they're adding Ethereum Classic. The reason why they're doing this is because Ethereum Classic was actually the original Ethereum. And then when it forked, there was a big hack and there was a whole issue about where all the money went. Should they be reimbursed the hack? Should they keep the blockchain? And so Ethereum forked at the time. And Ethereum Classic is the old blockchain, and the new blockchain is the Ethereum that is number 2 in market cap. And so that's the one that they've always had. And if you had that, if you did that fork, just like with Bitcoin and Bitcoin Cash, if you had 10 Ethereum at the time when it forked, you should also get 10 Ethereum Classic. So you would have 10 Ethereum Classic and 10 Ethereum token or coins. So you would have 20 total. And so a lot of people were really mad at Coinbase saying, hey, we want our Ethereum Classic. It is ours. It is rightfully ours. We bought it. We bought Ethereum on Coinbase and then it forked. We deserve to have our Ethereum Classic. And so finally Coinbase is allowing this, and it's pretty not easy, but it's a lot easier for them to integrate this because a lot of it is the same integration and coding as it was with Ethereum. So again, I think it's kind of lazy. And I mean, I'm not a big Ethereum Classic guy. Some people are. And so it depends. I mean, obviously, if you had some Ethereum Classic, you think this is the greatest thing since sliced bread. But what everyone's really waiting for is that XRP, whether you have it or not. There is a huge amount of people who are trying to get XRP and who are just waiting for XRP to get on Coinbase. Next, let's talk about Binance. So crypto giant Binance to offer euro trading pairs this year. This is the biggest thing that's happened to crypto, and I'd say the past 2-3 months. I mean, this is so big. I don't think people realize it yet. They are the largest exchange in the world, Binance. And as we know, they went to Malta. They moved operations from Asia and they're moving to Malta. They just partnered with the bank, which is going to be massive. And now they already announced that they plan to add fiat currency pairs and that they are going to have a euro-based pair by the end of the year. And that is pretty soon. Hopefully it'll be even sooner. Hopefully it'll be in the next couple months. And so this would be a first for Binance, obviously. Not many crypto exchanges out there have the euro pair that have as many different coins and tokens as Binance does. So this would be absolutely massive. I mean, Binance made 150 million profit in the first quarter with daily trading averages between 1.4 billion and 1.5 billion. I mean, that's insane. And this company isn't even a year old. I mean, it's just mind blowing how this just happened. It just happened so quickly. But this is going to be absolutely huge. I think it'll definitely expand the market. And we'll see at the time of when they announce it, when they actually confirm and launch the euro pairs. It'll be really interesting to see if they do it when the market is trending upwards or when it's trending downwards, because it seems like when the market is trending upwards and you start putting out good news, that's when it really starts to grow. And there's a lot of people, a lot of these different crypto companies and projects, they have good news. They have a lot of good news, but they actually hold it for when the market goes up. So that way it'll kind of increase the momentum. Momentum is huge in this market. And finally, with Binance, on a similar note, Binance deal paves the way for launch of crypto to pound exchange. So reports have emerged that a team from Binance has inked with a memorandum of understanding, a MOU, with officials from Jersey, an island just off the coast of Britain that will mostly likely pave the way for crypto exchange offering crypto to pound trades. This is not New Jersey in America. This is Jersey off the coast of Britain. So this is going to be massive. If they have British pounds and they have euro pairings and you can buy all these different coins, I mean, that is going to just be so, so big. And right now, I mean, really, there's not very big competitors to Coinbase who does offer some British pound pairings. So with this, there can finally be another competitor to Coinbase, and not only a competitor, but even better than Coinbase because there's so many more options for different coins. And they're also saying that a lot of these companies could be moving to Jersey, this island, because they've been so crypto friendly and willing to work with them as far as regulation happens. So this is going to be really big. Still no news about the US dollar being one of the base currencies that you could use on Binance. I would love to see that because when that happens, it is going to go insane. It's going to skyrocket, but everyone's waiting on the SEC. Everyone's waiting on the CFTC. Everyone's waiting on regulation here because no one's trying to break the law. It's so tough in America because they're being very vague about everything. They're not giving explicit regulation, but for good reason. They also don't want to make a mistake. They're trying to really make sure, comb through all this and make sure they make a right decision. So with all that said, that's what I got. I was going to see if anyone had any questions. Thank you, Natasha, for everything that you said about EOS, and for Eric for your great questions. Natasha, I didn't even see your last comment about the EOS community is educating how to vote. It's a testament to collaboration, and the bugs, the developers and BPs have been working together to debug. Yeah, I absolutely agree. I mean, look, EOS just launched. It's going to have problems. It's completely natural. And every time there is a problem, like I keep saying in this video today, every time there's a problem and you solve it, it only makes you stronger and you learn more. It makes you more experienced. And to be honest, that's one of the reasons why I really like Ethereum, because it has been through so many hacking attempts and successful hacks. And it has had such a robust history of different things that have happened with it. They've learned so much, and they're trying to do everything at once. They're trying to scale. They're trying to be decentralized. And so we'll see where that can go. But with that said, everyone is probably pretty down in the market right now. You're pretty sad about how things are going. And if you are trying to purchase more, because again, it's a great time to be greedy when others are fearful. If you're trying to purchase more, just think about doing something kind of like dollar cost averaging, which is buying a little bit every day or every week or however often you want to purchase it. You can buy some on a consistent basis instead of buying it all at once, because this will kind of alleviate your risk over time and you can buy it at a better average price rate. So with that said, I don't know. A lot of people have asked me when the crypto markets are going to go back up. And some people are asking, is this going to be a full year bear market, a 4-year bear market, or a 3-year bear market like it was in 2013, 2014? And to that answer, I don't know. And to be honest, nobody knows. If someone tells you they know, they're lying, because even the most professional expert crypto people, those are the people who are saying, I don't know. So you have to be honest with yourself. You have to understand that this is a risk. This is not financial advice, but you have to know what you're getting into. And if you do decide to go into it and buy some, you can do a little bit dollar cost averaging or something. So with that said, thank you everyone for watching. Thank you for all the questions. Had a blast as always. And now remember to go out there and get those cryptos. See you later.